Hello, I'm Robin Gibson, and this is the Harvard House Money Morsel. Welcome back. Thank you for joining us again. Don't forget to like and subscribe. Click the bell so you get a notification of when we release a new video. I'm sitting today, it's Monday morning, 12th of August. Michael, you rode the Harvard House Midlands Go gravel race on Saturday. How was it?
Yeah, it was good. The legs were maybe a little bit sore, Robin. There were a couple of tough hills.
Yes.
But it was a fantastic day. The weather was beautiful. The atmosphere was fantastic. And yeah, even though it was quite a tough route, it was a really nice race.
Awesome.
I am glad I did the 50 and not the 100 though.
Well, let's hope if you do get a little bit on the super sport coverage that your face looks good.
Yeah, well, I probably wasn't breathing in.
Lovely. Michael, we're sitting in a situation where we spoke earlier in the year about the fact that it seemed like markets were, from a local perspective, really just hands off. Everyone was in a wait and see position because of concern leading up to the elections. That's kind of coming through in some of the commentary and the numbers, isn't it?
Yeah, Robin. So in South Africa, we're starting to go through reporting season, and also quite a few companies are having sort of pre-close updates or AGMs where they give a little bit of a business update. And I think for me, two stand out. The one is ArcelorMittal. Long-standing people that have known me for a long time know that there are three companies I never buy: ArcelorMittal, Telkom, and Sappi. I just think they haven't had good track records. And ArcelorMittal's it's been in a tough space. The government's policy. I mean, we're not doing infrastructure, we're not using steel, and they've been in a really tough space. But they're saying that demand is starting to return, and it's not to say that the company's woes are over, but they're seeing a pickup in demand. And then Afrimat, which is a company that we love, and people will know that. They also came out with a business update last week at their AGM, and they were just saying that first quarter of their financial year, which was March, April, May, things were really quiet. I mean, the iron ore price was down. They weren't shipping a lot of stuff to a lot of iron ore out the country because of some of Transnet's woes. But they were saying June, July, and the start of August had been significantly better. And I think, Robin, this really highlights for me is that period from February, March to the elections was a really, really quiet period in this country. I know that load shedding sort of really stopped at the end of March. But you've got to remember all the issues around MK and the uncertainty and whether the ANC are going to get less than sort of 40%. And there was a huge amount of concern about the elections, which in some ways was not misplaced, in the final outcome. And the country really, we always go into wait and see mode before elections, but we really went into wait and see mode before this election. And so a lot of companies are going to report results now, and they're actually going to be quite poor. The market might take fright, but what the market's really looking for is what's happening going forward now. So yes, it's in the past and the markets know that, but what they're really analyzing is what are the companies saying about what's going forward? Has there been a pickup in activity? Are things improving? Is the benefit of no load shedding coming through in terms of their costs? So as much as you might see some headlines saying, XYZ is down 20% or the profits are down, just be a little bit circumspect about that, because markets are forward-looking and markets price in the future. They don't. What's in the past is in the past. It's what's coming is what's important. So yeah.
I remember, Michael, that one of the things we highlighted in one of our conversations was the fact that there had been a really big drop-off in the Absa PMI, the Purchasing Managers Index, and you indicated that you thought that was kind of like you expected a bounce back. We got that bounce back, and properly, didn't we?
Yeah, so that bounce back. So I think the 2 months before the elections, Robin, I think probably May, even June, it was sort of 42 and 44, 45 around there.
Yes.
And anything below 50 is a contraction. Last month it was up at 52. And again, as we wrote in our Intuition newsletter a couple of weeks ago, there were six or seven stats that we thought were worth watching quite closely to see if the momentum is changing in the country. And the PMI index was one of them. And the PMI has sub-indices which relate to employment and new orders. And the new orders one was ticking up. Now that's what you want to see. Are companies getting some new orders? Is there a bit of demand going on? So listen, it's not going to change overnight. We need to see some interest, we need to see interest rates falling. Life for you or I or or the average person out there hasn't changed. You've still got high interest rates. You've still got debt. Things are still pretty tough. But if the mood is starting to change and the confidence is starting to change, that's one of the precursors to you thinking about your finances differently or the opportunity.
We also saw, we talked last week about the wobble that international markets had, and the rand sort of blew out on the back of that. But we've seen the rand, the rand's back at sort of 18.29, I think, this morning. And we're also seeing some money coming into our bond market. The foreigners are coming, aren't they?
Definitely, Robin. In July, I think foreigners were buyers of bonds for the first month in probably 2 years to the tune of 20 billion. Now, we've had massive outflows out of bonds, but 20 billion inflow in a month, we haven't seen that for 3 or 4 years, And so, yes, it's early days. They have been flowing into the equity market, but it's been much more guarded, I suppose, in the equity market. But yes, bonds have really rallied. And also, I think what you remember about bonds is that bonds rally, it brings the whole interest rate curve down. Government's issuing at a slightly better rate, and it takes the pressure off. It takes the pressure off our local institutions having to finance the bonds. Remember, the government's issuing 4 billion rands of the bonds every week.
Yes.
So if foreigners aren't there buying, then interest rates tick up because there just isn't the demand here to soak that up every week, Yes. So it's very good news, Robin. I think things are really, all the initial signs that the things are moving in the right direction. I think even us, we have to temper our, enthusiasm, our expectations, because Rome wasn't built in a day, and it is going to take a little bit of time. And obviously, we're watching the Middle East very closely.
And what's happening let's hope the Middle East doesn't ruin the party.
August is traditionally a very quiet time of the year. Lots of Europeans and Americans go on holiday and enjoy the last of the summer before the days start to shorten again. Yeah. And so it can be quite a quiet time. The Olympics is over, unfortunately.
Don't know what I'm going to do with my evidence now. Yeah.
It's been a great spectacle. But yes, I think we should just temper our expectations. But certainly, there's a lot of evidence to say that I think the mood is turning in this country, which is very positive. But it doesn't happen in a day.
No, awesome. Michael, thank you so much for giving us that insight. Thank you for joining us. Don't forget to like and subscribe, and we'll catch you next time. Bye-bye.